Welcome to August 21st, my third webinar this month. I hope this, for those who've watched the webinar before, I could see some are back on. I'm hoping that you're getting something out of it. I'm trying. The purpose of this is just kind of to focus on the last half an hour. That was my main focus, because there's some good setups, and that's really the best time to trade. If you were going to carve out any time of the day, the last half an hour is the best. There's many things that happen in the last half an hour, and we'll get into that. So meanwhile, today we might bounce around a little bit. We're going to look at some live markets as well. Look at some markets today. A couple recent shots that I took. For those who have not been on any of these webinars, I might have to do a quick review. I'm not going to go through all the slides that I did originally the first day, so that we could keep it fresh. But I will for sure try to review some of the indicators and little setups I use, just so you understand what we're looking at. My information is up on top. PhotonTrader Services is putting this on. You could ask me any questions you want, send me an email, call me after the webinar through the week, and I will for sure get back to you. If it's not immediately, it will be fairly quick. Just throw this risk disclosure doc. It's important to know that futures can be pretty volatile, and you're using leverage and margins, and I'm trying to give you some good material. This is my opinion, strategies I used that I like, that I've tested on my own. I'm not going to give any claims of guarantees here, so I just wanted to be fair and let you know that. But it is my best try to get some information that's helpful for you and go over all the things that I have learned in the last 41 years. Here's I came from the floor of the exchange first 28 years. I was on the CME exchange. I held four seats through my life and my career. And of course, I owned one of them. I owned two of them, actually. No, I owned three of them. Board of Trade, item seat, mid-am, and then a CME seat. This is the Board of Trade in 1898. I like showing this just to lighten it up a little. So this is in the 90s, the S&P pit. I was in there. It's pretty hard, On this picture, I was kind of trying to figure out where I was, but I know the actual area. Anyway, for the most part, most of my time was on the floor, but after 28 years, I saw the everything going electronic little by little. So my firm, Future Path Trading, decided to create a software called PhotonTrader, and we took it off the floor to start getting in front of the edge and get in front of the electronic trading world. I was kicking and screaming, I got to tell you, because I came from the floor and that was my life, but I was realistic, knowing that things are going to change. This is the Euro-dollar pit. I always talk about what I could take from the floor to the screen, and it's because it's all the same. It's one big auction. The difference is the floor is where the price discovery was, and that they controlled the pricing. Nowadays, we all control it. We're part of the auction process. So that's a whole other reason to feel good about trading, is that the edge is available to you, and it's more of a flat trading field for everyone. It's fair because you can have great execution, great commissions, you can lease a seat, you can do all the things that everyone else can do, and pretty much have the same edge. At least the landscape is flattened out. So I want to talk about volume. You've heard some of these before. Please bear with me if you've heard me talk about it, but I feel like volume is for sure one of the most important indicators. The fact that volume is the only real-time indicator that I can tell you. It makes it important. What I mean is, by the millisecond, volume is being calculated, and you can see the volume in multiple ways. We offer, for instance, FuturePath 20 platforms. Now, most of the platforms have different ways of showing volume, but it is important because volume can confirm charting patterns and breakouts from them, where there's trend lines and things like that. You know, if you make a new high, if there's good volume, there could be follow through. If there's not, you want to fade it. But it's a real-time indicator where if you have stochastics or DMI, ADX, they're all lagging. And so you're kind of predicting the future based on the past rather than exactly what's happening at that moment. So that's why we'll talk about it a little bit more. PhotonTrader designed a volume candle that uses an algorithm that spreads open as it gets wider as the volume comes in. If you look like at this chart, this is a 5-minute bar chart. Normally a 5-minute bar chart, you can't see the volume unless it's down below or there's some other indicator showing it. This widens as you're looking at the chart, which makes it very easy to see. And no mistake if you're making a new high and you see those bars get really big. For instance, you could see these bars are huge, and then we had consolidation here, right? You see right here, this is consolidation, big wide bars, big volume, rest period, then a breakout again. So it's confirming the new breakout to the upside. This is, for me, it was important because that's what was important in the pit. We could see the volume coming in. We could see who's buying, who's selling. You could see if Goldman's coming in, if there's a new high being made and it's only members, which we call them locals. It would be a quick dog pile out to get, start shorting it and get out of your longs. Or if I'm bidding on the high and I can hear myself bidding and I'm the only guy bidding, I'm for sure knowing I'm wrong. If I can't, I'll turn around and hit the first bid. So here's an example of volume candles on top, photon, regular candles with photon on the bottom, same chart. And you could see there's the breakout. But if you look at the breakout here, how confident are you to buy that new high here? You might think, oh, we already had a good rally, I'll buy the pullback. But when you see this, it's a completely different picture. Yesterday I did a show. I was a guest speaker on what was it called? Market timing research. And one of the things they asked all of these speakers was, what do you think for the rest of the week? Give us where do you think the S&Ps will be at the end of the week, or what would it do in your confidence level? Well, so I threw this chart up because if you look here, this is a daily chart. These little green dots mean a buy reversal. You could see these spike bottoms, or you could, on a market profile that might be single prints, rejection, price behavior shows that there's rejection here. Market did not want to go lower. It brought in buyers. Same here. Well, everything looked good except for the NASDAQ. The NASDAQ had just some pullbacks from a couple of the big stocks and some earnings and bad news, and I figured they'd catch up. But there's 3 indexes that show straight up. So my prediction was, no, I'm not telling anybody to get long or short here or where, but my prediction was that by the end of the week we would test the S&P highs, and I was pretty bullish, and everybody was, I don't know, not bullish or kind of neutral or a little friendly, So it'll be interesting where it goes. Well, this is today, and this is today's bar. Now we really broke out, and you can see the NASDAQ turned around, okay? And the NASDAQ got a buy reversal too. So we got green dots on all these, and we'll go over what that is. Another thing that I look at here is like a 21, I just threw this up I don't want to throw a bunch of moving averages in, but I use a 21 close moving average rather than a 20 EMA. And I use, I have the slope change color because the slope of the moving average is important. The slope here being blue means we're up, we're going up. It just started to turn a little blue there, but we're pretty much on our way up, and we'll see where it goes. And we'll look at the market today. Today will be a pretty interesting day, actually. So let's see, this is today. There you go. I got some slides from today. This is what we did early on. I think I stopped snagging things around 1 o'clock because I had to grab something to eat and have my coffee, right? But this is what the market did on the opening. It's really important. Look at this volume on the opening here, okay? When you have that kind of volume off the opening price, this bar is going to be really important. If we ever break it, that's going to be a huge reversal. But a pullback down there would be a buy, because this was institutional buying, and coming back down there, you're probably going to get more buying again. But you could see the market moved up. And what do we do? After the market moved up, we got a little sell. You could see buy, sell, just kind of like sideways. You see the volume lighten up. It's a consolidation pattern. And then you see a little bit of a test down. Let's see if this is really a good buy, right? Come close to the opening range, spike. We leave a little tail, and then we get a green buy, and we moved all the way up to this point. I'm using here a 30 high moving average and a 30 low moving average, and we'll get into that. This is a 10 close with a red-green, slope color, color rule. So if it's going down, it's red. If it's going up, it's green, because it's really important. If the short-term moving averages are pointing down, you want to be careful of getting long. I'd rather have them sloping higher. Down below, I know it's stretched out, but this is the 310 oscillator. This is what Linda created, and it's in PhotonTrader. It's you could create it on your own, probably using the difference between the 3 and the 10 moving average and a 16 slope. That's what that is, and it's a great momentum indicator. For me, it's the best indicator there is. I'm not saying it because Linda's my wife. I've been using it for 20 years. It's one of the best momentum indicators. All right, so that's in Photon, but you could create it on your own. I'm not trying to sell you Photon here. I'm not trying to sell you anything, just trying to teach you something. Here is the crude today. I wanted to look at some other markets. I promised I would, so here we are. Now, I want you to take a look at this. In the morning, crude has some pretty good volatility and good volume starting around 6 a.m. Central. Because you have world participation in crude for sure, a lot more than anything, because it's such a world commodity, right? But look at this volume, come in here, and all these green dots mean no reversal, no reversal. Here you had an outside move, so a little bit of zigzag, but continuation, and then big volume, confirming that the market's going higher, 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 higher. Now, that was a decent move. We went from 65.45, made a high somewhere around 66.40. So 95 points, what is it, $950? That's substantial. Then we got a reversal up here. That's what this red circle is. So we got our first signal that we could retrace. The next signal is when you saw this little, the 10 slope starting to turn down. So both of those to me would have got me probably short, at least for a scalp. Now, I'm going to tell you, when the market is bullish and you have an up move and overall the day is up, I almost prefer to look for dips to buy. If I do short it, It's like tipping my toe in the water. I don't get cute. I don't try to hold on and get too short, because ultimately what happens when you have a good bullish trend and you see this kind of move, these are big volume coming in, it's going to probably turn back up. Not always, but for the most part. So at this point, market came down to the 30 low moving average, and then we got another sell. So the market was pretty weak at this point, and you wouldn't have gotten, if you were just purely, waiting for a good confirmation to get out, you'd still be in the market maybe on this reversal when the 10 turned up. You see the green from the red slope, you got to buy here, and then the market went up. Now we'll take a look at crude in a little bit. Maybe if we get some time, we're going to play after the close. And all right, so let's go to the volume candles again. I'm going to bounce around here. Take a look at this triangle, how volume can tell you that there's confirmation. And I'm teaching you something that so many traders have an issue with. They look for breakouts on triangles, but those are the trickiest breakouts there are, because we're all waiting for this triangle to break, and then we all jump on, right? Well, if we're the only ones jumping on, and I mean us traders out in the audience, unless Goldman's out there listening to my webinar, chances are we're not going to move the market much, and it'll be a fake out. Now, if it breaks through there and good volume comes in, let's say it's institutional volume, and they're starting to take profits because of it, or they're getting along because of it, you can see on the bottom what happened when it broke out. So this is the triangle right here up to this point. But when it finally broke out, we did have a sell on the dots here, the reversal, and it really kept moving lower, which this volume here confirmed that we're at least going to go and fill the objective, right? And of course, I would just measure from here to here, add that to here, and you met the objective, but it continued lower. Had a little bear flag, moved down, bear flag, 3 pushes down probably. I guess it went a lot further. Here's the 30 high, moving average 30 low. Let me explain to you what that is. In fact, I had somebody ask me today, a real nice gentleman called me up, and he says, okay, I feel kind of stupid. What's a 30 high, 30 low? Well, maybe I didn't explain it clear enough. It's 30, and I use the simple moving averages. 30 high is the last 30 highs of the market and the last 30 lows. So if you're on a 5-minute chart, it would be if you were to actually calculate it yourself. For those that might not know how moving averages are calculated, because you'd be shocked that people use them and they don't know how they're calculated. It's probably the simplest explanation. If you were to take the last 30 highs, add them up, divided by 30, you would get this last little point. If you take the last 30 lows, you would get this one. And you can see that I also put a slope red-green on there. So if the slope's pointing down, that gives me more of a bearish signal. So at this point, the market broke. We'll get into these dots because I've had this question, and I sent out the code for that. I'm not here to keep everything in my little toolbox. I'll offer it to you if somebody wants to try to put it into their front end or their software. But that's what I call a PAV reversal, because it was something I created. I mean, we'll get into that in a minute. Here's a couple charts here today. This is the euro currency using the 30 high, 30 low. And let's just talk about the 30 high, 30 low. So back in 87 or 86, there were no real charts. There was one company that did a 10 moving average or something on a green single bar display, and it wasn't, I think it was a daily chart. They didn't have computers really out there collecting data and plotting it in 86. But I started selling my charting services in 1979 when I was at the Mid-Am. Mid-America Exchange. And back then, it was very interesting because I had to use just regular graph paper, and I plotted moving averages purely by hand. I would add them up with a calculator, divide them by, if it was a 10 moving average, add up to 10 close, last 10 closes, plot, add it up, calculator, divide it by 10 and plot it. And I would connect the lines. And I did this in 10 charts, and I used all kinds of basic patterns that I would look at. I was using GAN, which I don't use anymore. But at that time, in 86, I think it was actually, I started testing a 30 high and 30 low pattern, but it wasn't just, it was a high low band. Okay. This is what basically a high low band. And I tried all these different high lows because I thought, like, moving averages, they're probably the highest probability when you have volatility, right? Lowest probability when it's nothing's going on. For instance, you can see here when the market's going sideways, if this was just a 30 close and a 10 close and you bought it when it crossed above and sold it below, you would get chopped up. So I like the high-low bands because if they could get above 30 highs or 30 lows, there's some strength coming in the market. And if they fail, then you can get a real nice move down. So in this case, we got a PAV reversal here, red dot. That was your first sell signal. Your second one was right here when the slope turned down. And actually, you would have had a third one here, but the market pretty much started to trend sideways. Now, there's no doubt the reason why this happened, this is a couple hours after the European currencies open. It gets pretty quiet. They're going for their cappuccinos and everything in Europe. But at this point, when the market started to get, it started to pick up volume when the U.S. markets are close to opening up, you could see then we start to get the move. So it's a nice, all these things together should be helpful. And if you look down here, when we were going sideways, that shows that there was momentum started to die. And that's another little trick. And I'm not able to go too far in a lot of this stuff. Here's just another quick chart of a market breaking out. You can see the volume when it went above the consolidation pattern. Be careful with trading markets because you don't get too cute. You get these guys that market starts to sell off and they're thinking, oh, there's going to be a big pullback. It went up too high. There's no such thing as too high or too low. Let the market tell you how far it's going to pull back. Right here, it was pretty evident that it was a little bull flag, and then you could see a green dot and the market moved up. A little bull flag, a little pullback, no volume, and then boom, big volume. Little pullback, no volume, and then boom. So the one thing I can tell you to keep in mind is when the market's bullish like this, don't try to get short. Get out when you're long right here, but wait for the next buy signal because you want to trade in the direction of the trend when it's a trending day. Now, that's when it's a trending day. There's no volume in the day and you get, spike here, spike on the bottom. That's when you can pull out your stochastics and overbought and oversold stuff and scalp. Thanks for hanging out with me after the close. I hope you had a good trading day. I hope you have a good trading week. Hopefully we'll see you next week. Take care.